All right, all right, all right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Ben Allen. Hope everybody's doing well today on this beautiful Wednesday. As always, let's turn off all distractions, grab pen and paper, let's take lots of notes, and let's make sure that we participate and engage. And as always, we want to make sure that we're taking massive action, and the action stands for accepting all possible losses before entering a trade, preparing you for the outcome, setting yourself body, mind, and spirit, ensuring a balanced approach to trading, trust in your education, strategy, trade skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right, so let's get to it, man. We got info to cover. Bank of Japan made some decisions last night that are showing on the charts. All right, so we'll cover that. Australia inflation, Eurozone inflation. We got a little bit to cover. And so we'll get to it. If everybody can hear me okay, drop me one in the chat and we'll get rocking. Perfect. See the ones coming in. All right, beautiful. Appreciate it. So top news. BOJ. BOJ rose increased the policy rate 0.25%, which is in line with the expectation. All right. Uh from the prior range of 0.1%. So decent increase, more than first increase, and it's the second time in a long time that they've increased rates. Central bank added that it would reduce the monthly bond buying to the yen to 3 trillion, which is half, in January to March of 2026, right? So in the next 2 years, they will decrease their bond purchases. They will cut them in half, uh, which is the current amount is around 6%, to pursue a more normal policy. Um, it's their plan to lower the balance sheet and slowly retreat from the bond market. The quarterly outlook, the BOJ projected core inflation for fiscal year 2024 to fall to about 2.5%, less than April's forecast of 2.8. So they're expecting inflation to be slower than originally expected. It will also be around 2% 2025 and 2026. On the GDP front, policymakers cut their 2024 growth forecast to 0.6% from 0.8%. on a statistical revision. And then for 2025 and 2026, BOJ maintained their GDP outlook at 1%. So there's an interesting conversation that's happening where investors and other policymakers are taking this more as a dovish hike, even though we're seeing the yen continue to gain strength. Um, because of the decrease in the inflation forecast and the decrease in the um, 2024 growth. Um, but then there are some that don't see that occurring. Another article I read, the reporter said that this was more of a change with them changing both the policy rate and the forecast on the bond purchasing. This was more of a change in the data than the data showed. Um, so there's an interesting, I would say, back and forth conversation happening about the policy change and the press conference. There also is a potential for another rate increase later this year, right, from the press conference. So um, that's where we are at the Bank of Japan. They finally made a change and they made a relatively strong change, but there's still an interesting back and forth conversation. So we'll look at the yens and see how those were impacted based on that decision. You also have Eurozone inflation, annual inflation rate in the Euro area unexpectedly edged up to 2.6% in July from 2.5 in June compared to a forecast of 2.4. Um, So this causes a little bit of a headache for the ECB, right? Seeing as inflation ticked up instead of continuing moving down. So we'll see how conversations move going forward with the ECB. Looking at their September rate decision. Um, but this data is interesting, seeing as right rate cuts, now inflation is going up. Now what has to happen if rates continue to take higher? Do they then have to come back and increase rates, right? So we'll see how things go there, but inflation in the Eurozone ticking up. Then you had Australia inflation data last night. Australian inflation rate rose to 3.8% year on year for Q2, from the lowest levels in 9 quarters, a low of 3.6% in Q1, aligning with the market consensus. It was the first increase in CPI figures since Q4 2022, excuse me, amid higher inflation in both goods and services. Within the trimmed mean CPI increased by 3.9% year on year, the softest rise in over 2 years, slightly above the forecast of 4%, but remained outside of the central bank's 2 to 3% target. So the rate increased at its slowest pace, right? Still increased, but it's slowing down. So that's why you saw some movement against the Australian dollar yesterday and this morning as well, is because things are slowing down, but still not in the bank's 2 to 3% target. All right. So that is for the Aussie. And then forecasting ahead to today, um, the Federal Reserve is anticipated to maintain the federal funds rate for eighth consecutive month. However, policymakers are expected to deliver a critical hint that they might lower borrowing costs in the coming months amid signaling a cooling of inflation and slowing labor market. In June, annual headline inflation rate dropped to 3%, the lowest level since June 2023, while the core rate hit an over 3 year low of 3.3. Now, the annual PCE rate also declined to 2.5 from 2.6. Core PCE rate, which is the central bank's preferred inflation gauge, remained at 2.6, well below its peak. And then you have unemployment is at 2021 highs of 4.1%. Payrolls are slowing, layoffs are rising. So we'll see what happens with the Fed today in their rate decision to see if they do give those hints based on the data that is available, right? I understand we do have more data coming this week as well that could cause for an interesting back and forth as we continue to move. All right. So that's the update on what happened yesterday. Ba, 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 ba. Right. So that's all that yesterday. Here's those numbers for Australia. Right. And then here we have CPI for the Eurozone here. Right. That slight increase, 2.9% and 2.5%. Later on today, we got ADP, non-farm employment change. We have GDP for Canada, employment cost index, quarter over quarter, Chicago PMI, preliminary home sales, crude inventories, and federal funds rate today. Right. So all eyes are pointed here. We'll get this data, but all eyes are pointing here at 2 o'clock. So that's where we sit from a fundamental perspective. Benny, good morning, bro.
Ryan, good morning. Good morning, everybody. Ryan, how are you this morning?
I'm doing well, man. How are you?
Oh man, I'm doing great. Always glad to be here with the team.
Yes, sir. Thoughts fundamentally, man. What's your
Oh
take?
man, big moves from the Bank of Japan, right?
Yeah,
Yeah. I mean, especially since we already headed to the downside. So the crazy correction that everybody's been looking for in the yen is finally coming through. It's just all about where does it settle, you know, as a result. And then, like you said, a possibly another rate hike again this year. Another interest rate hike again this year. So it'll be quite interesting, but great, you know, great price action on these yens to see them finally come down. I'm interested to see this is pre-market, of course, right? So the market here in the US, right, not even fully reacting to it yet.
yeah,
So definitely interesting to see what happens and see what the carry through is going to be today on these yen crosses. And then, like you said, today all eyes, right? uh, on this afternoon. Expect them to hold, but then it's all about that forward guidance, you know, later to see what's going to happen. Since people are saying, "Hey, we're going to get that first rate cut in September," right? High probability there. Let's see what the language is, see what the rhetoric is. Especially with ADP and then non-farm happening on Friday. Let's see what type of tone he strikes today regarding that. And then that euro, right? Lagarde said it was wide open. She said it was wide open as to what's going to happen. And they're going to be data dependent, and to see those numbers creep up in the eurozone, it's going to be quite interesting moving forward. So, hey, I need the volatility, so it's all good.
yes,
It's
sir.
all it's all good. Staying focused on those key levels coming off that off the daily uh, is really quite interesting and fascinating to watch it, align with what's going on fundamentally. So yeah, man, great job. There's a lot to cover, man. Great job doing that.
No, I appreciate you, bro. Appreciate you. Um, Team, do you guys have anything from a fundamental perspective you want to bring to the table, or any questions from a
What
fundamental
up?
perspective? Joy, what's the
What
deal?
up? So I didn't share it. I forgot it was a quick read. China announced that they were increasing fees for high frequency traders. Would that have any effect far as in the traditional market?
Mm. Benny, you got any thoughts on that?
No, I don't think so. I don't think so. Not the way we look at the markets. That's way down low on them lower time frames. I don't know if it'll, maybe on the announcement you might get an emotional reaction, but they're gonna keep doing what they do because I don't know. They're increasing fees, so I don't know where they have been relative to other other markets and what they charge in regards to the fees. You know what I mean? So I don't know if their fees up until this point have been super low, and they're catching up with where everybody else in regards to fees, or if this is gonna push them way beyond. So uh don't know. Would love to read up on that. But
Okay. Yeah,
my first initial reaction is, they're gonna keep okay. We're gonna get some higher fees. They're gonna keep trading.
their goal was to decrease their trading because they said they're too manipulative in the market. So
Hmm.
I'm like, I wonder how high. It didn't say how high it was, like you said, where they started off from. But I'm like, I wonder if that's going to have any effect for us. Will that help us? So there's not a lot of spikes in the market and stuff like that.
Right. Yeah, I'm not sure. I'm not sure of, like I say, where they were and what the overall impact could be. I mean, their goal is to slow it down a bit. So we'll see. It'll be interesting to find an article or read through the research from a historical standpoint when fees have increased. What the impact has been for high frequency traders. You know, um, if it does have the impact that it wants it to have, is that just a short term temporary impact, or will it be a long lasting impact in regards to the amount of transactions that's going on? So yeah, interesting, interesting indeed. You read some fascinating stuff. I don't know how you find this stuff.
She be on it, man.
So I went on some Twitter feeds and followers of the
Oh,
SEC and stuff like that and start following. One of them is from the dude from Forex Live. Him and
okay,
Diana somebody. She is a financial director over a company. I basically follow those two and everything they've been saying, you know, seems pretty legit, but like I say, I follow from the SEC. I follow from y'all Twitter page. I looked at who y'all doing, and I went from there.
got it, got it. Appreciate it. Yeah, so that'll be interesting for high frequency trading. So, but I don't as a swing trading. You know I don't see it having a huge impact.
Great work. Cool. Cool. That'll be interesting to see. I don't think that it'll change China's manipulation though. I think China will continue to manipulate as they do a lot of things when it comes to data and just overall visibility into things. But great work. Great work. Um,
Can you pull down a little bit for the US yesterday for the CPI? I think it was not jobs,
Joe's job openings
yeah.
slightly above. Yeah.
So with that news, we are expecting our Fed not to raise rates because we're getting a lot of spending. So it's for us to reduce our spending, right? In order
Um,
to increase the rate, lower the rates.
yeah. So Benny, what's the impact of the Jolts job openings compared to um well, I guess the difference is job openings, yes, there are more. But when it comes to like future reports, when it comes to payroll, unemployment rate, that is more of an indicator. Um, because yes, we have more job openings than previous, but you have more layoffs also, right? So I think, and this is just my thoughts here, combination of layoffs coming or layoffs happening, some of those jobs being reposted at lower pay scales, and some of those jobs not being reposted. So you have an increase in the number of job openings because you're also seeing more layoffs happening, I think. But then when we get to those payroll numbers, that's going to be a key indicator, average hourly earnings and non-farm employment change of how many jobs have actually been created, like newly created, and how much are those people actually making? And what does that employment rate look like? Is that employment rate continuing to increase or did it decrease? And so that combination kind of add or gives you, I think, that number of that JOLTS job openings, like I said, based on the layoffs and the number of jobs reposted in combination with actual jobs created. Benny, am I on track there?
Yep, yep. Because if you're getting jobs, more jobs to open, but it all comes down to exactly what you said. Like, what are the wages, right? Or wages increasing or decreasing, right? Because an increase in wages typically leads to what? More spending, right? So, that's the whole key. So the data can appear kind of mixed, in the onset, but when you really get down in the finer details in regards to, like I said, are the wages increasing? Are they decreasing? That's the key factor. So yeah, I would say you're spot on.
And Joe correct too. That number also includes internal hires. Um, and so a lot of internal changes as companies consolidate and change and decrease roles and increase responsibilities. You see that internal change as well. So that's not as much of an indicator as the later reports for the later reports in the week. Does
Thank
that
you.
does that help, Donna?
Yeah.
Okay. Okay. Cool.
Thanks.
You're welcome. Excuse me. So, to the charts, we'll take a look at the dollar. Done that. I see that 80-20 on gold, so we'll take a look at that as well. DXY, right? We're still in this range here between 104,462 and 103,991. Right? We're headed down to the bottom of that range currently. So we'll see where things level out. And we'll see how the conversation with Jerome Powell goes this afternoon to see if we continue to the downside, break out of this range, or we turn back over and push back to the upside to the top of the range. But right now the dollar is just range bound, moving sideways, as we see here. Okay, we initially broke that level, and then we came right back into the zone. Okay, so we'll see if we get another bounce to the upside for a full breakout of that range. So that's on the 4-hour time frame here. Still inside that AB boundary, but just bouncing. Okay, so that's the dollar. We'll see what happens with the Fed later on today. Let's take a look at gold real quick. Capital fib is here on the daily time frame. We got stochastic pushing out of the buy zone, price pushing to the upside, right? We got a 50% retracement, and this is looking to be a higher low, right? And we'll look to see price continue moving long, getting us to ultimately this $2,600 range over the long term. It will come down to the 4, and that push down took the A out. So let's update this. We'll take those out. We'll run the fib off the high. Right, and see that reversal pressing to the upside here. We haven't broken the cloud yet on the 4, but we're moving back long. Okay, we come down to the 1, and here we are. Right, we had a beautiful 80-20 scenario to the upside, getting us back in our long positions. Yes, last day of July. That is also important, as you'll see. It's an interesting combination, right? combination of data and the end of the month, right? A lot of times at the end of the month, you'll have your hedge funds and banks and things like that cleaning up their balance sheets, right? So you'll see some additional volatility last day of the month. So yes, be aware of that. But beautiful 80-20 to the upside. And it's Wednesday, right? We see reversals come to market a lot of times. Absolutely. Absolutely. Stochastic is in the middle, right? Pushing to the upside. So let's run the fib off the low, and boom, that's what Donette is seeing right there. So overall, on gold, what I'm looking for is pullbacks and continuations, right? We've been getting some really nice retracements down into our sweet spot on these moves back to the upside, right? As we made this deep correction. Now on our move back long, we've been getting some really good opportunities there. So we do have this 80-20 here on the one, looking for price to come down into the sweet spot. You can play that 80-20 down and then look for buying opportunities, or you can wait for the low price to get back long. Over the long term, uh, definitely looking at gold getting to 25, 2600.
I like the 4 hour though.
Say it again.
I said I like what I saw in your 4 hour there
On the four.
with the cloud.
It's inverted head and shoulder.
Uh, yeah. Right here. All of it, yeah. So if we get that cloud break, that'll give us some good confirmation. Joy got the head and shoulders pattern. If we get that retracement, boom. Right? Some fun action happening there. So yeah, absolutely. Right. So we'll look for that retracement, low price, give us the right shoulder, and we'll play that to the upside. Right. So we got two ways to look at it. And there's the look there. Okay. But also you see that back to those swing lows on the daily, right? That swing low formed here. Right, that's your low. So as you come down to that one, there's your reversal, right? Pull back with your reversal and your initial cloud break, pull back to retest the cloud, take off. All right. So looking at those reversals as well, excuse me, this chart actually gives us a lot of what we kind of look for, right? Cloud breaks, pullbacks, continuations, deep retracements, and now we have an 80-20 scenario that we're also looking for a deep retracement on. So appreciate that heads up on that, Donette. Drop some sevens in the chat for Donette. First trade setup of the day. Looking for that retracement there on gold. Come back, retest the cloud, deep retracement, and then uh, we'll look for a move to the upside. Sub fib on the 4. Yeah. Right here, Reese. Off the high. Uh, right there. Gotcha. Yep, you got a high price there, yes. But I guess this comes back to the overall bias in the position, right? Are you looking for price to continue moving to the downside on gold, or are you looking for price to continue to the upside? For me overall, my bias on gold is long. So I'm looking for low prices to get back long there. So I don't know, and we'll obviously see over time, but I don't know if gold will continue to press down into these lower levels. So that'll be an interesting piece to see there. If you get a deeper push there, or if price turns back over and gives us another move to the upside to take out that A. So just something to think about as you're looking at that, and as you're if you take that retracement position there. Okay. Yeah, there's so many scenarios, man. So many. Um, so many scenarios, so many different ways to look at it. Um,
I like
couple
when it's
things.
this way though, because your risk is, you know, minimal.
Yeah. No, it definitely is, right? The risk is definitely minimal on that move to the downside, and it's just how you manage that going down in the event that you do get that reversal back to the upside. Um, and right, so you have FOMC meetings today, right? And the expectation is for the Fed to signal rate cuts in September. That's the expectation. So if that occurs, right, you could see some dollar weakness. If you see dollar weakness, you could see gold push to the upside, right? So that's also where the fundamentals come into the scenario is what's the conversation like, and where does price push from there? Um, so we'll see this afternoon, right, where we stand from a fundamental perspective, and and then later on this week too, right, as we get to Thursday and Friday, non-farm payroll, what the beginning of the month looks like from a payroll perspective, because that could either, if we get this retracement to come, right, um, off this 80-20, that'll either give us the low price to get back long, right, or that'll extend price to the downside in Reese's scenario on the 4 hour, right? Um, so we got tons of information to come that will ultimately give us the answer, right? Do we stay inside this AB boundary, or do we run to the downside, right? And run to the D extension here on the sub fib on the 4 hour. It's an interesting scenario. Interesting scenario. So we shall see what happens. But either way it goes, we're still looking for price to move to the downside, be it in the short term or the midterm. So,
I got a prediction.
talk to him.
We're gonna get that dang on pin bar, and it's gonna go all the way down and pin all the way, and then pin up. We're gonna have a long stupid wick.
It might, it might, right? Depending on how the Fed comes out, it definitely could give us some wild volatility, right? And being the end of the month, it definitely could. It definitely could. Um, it'll be interesting. It'll be interesting to see. I'll say that. It'll be interesting to see for sure. For sure. Any other thoughts or questions on gold? Yeah, I see that too. Excuse me. All right. So that's gold. We will see what we get. All right. Let's we went over the dollar pairs on Saturday. That's on that. I want to check in to see where they are coming into rate statement today. Right. So here's our 80-20 on the dollar yen. Continue to press to the downside. We got daily support coming in at 149,486. Right, so the 80-20 is playing out beautifully. We got the cloud break. We got a slight pullback and a continuation down. We're looking for a retracement to come that we didn't get on the lower time frames. But we'll see if we do get that. Now, the other scenario is, does the Fed, do they signal a future rate hike, but not give timing? How dovish is their stance, right? I guess is where what I'm getting at. And are they dovish, right? Or do they still have more of a hawkish perspective? So we'll see what their conversation is. If they do have still somewhat of a hawkish perspective, we could see something like that, right? Also, with the market taking in the BOJ decision, right? So we shall see here on the dollar yen if at some point we get this retracement or not, right? So that's on the daily time frame. Down on the 4, this is where you are. You got that 382. This 118, 127 zone is in line with that support level. We'll see if this gives us a reversal, if that support holds, or if it gets broken with the dollar data. Okay. Then down on your 1, we ran to the D extension. So we're looking for a fresh AB boundary and then a new fib to pop in. Okay. Something like that. All right. And more, actually, we have a new AB boundary here. So this is our new fib here. Okay. So that's technically our new AB boundary, 2 to the right. So now we'll see if we get another push down and then that reversal. So we'll watch that closer to see what happens there. Okay. But that previous 80-20 did not play out. So could be in for a deeper retracement at some point. Okay. So that's where we are on the dollar yen. The dollar CAD, we're still sitting at high prices. Still sitting at high prices here. So, right, based on how the Fed comes out, and we talked about this on Saturday, right? Do we get this deeper move back down to the bottom of the range here? Okay. You see, we're just stalling, tons of indecision right now. Do we get this move back down to the bottom of the range at 135,971? Right. And that would come with weakness in the dollar. So that's from a daily time frame perspective. On the 4, right? You just wick that 118 level on that push up, and you see price trying to turn over and make its way down to the downside here. Okay, so we do have this 80-20 on the dollar CAD, and we'll look to see price make its way down. Okay. And then back down on the 1, back to our 80-20 scenario here. Okay, you can see price, like I said, starting to turn over. We'll see if we get a nice cloud break and a Kumo twist to give us that move to the downside. Okay. Questions on dollar CAD?
Going to be interesting because we have both CAD and dollar news today. So
Yeah. I definitely will. I think the dollar news might trump it, but you do have GDP month over month there. It'll be interesting to see how that number comes out. But I think the dollar news would be the driver of the day. I haven't talked about this much, but we do have the conflict over in Israel with Israel and Iran. I shared an article. Benny and I were chatting a little bit yesterday. I came across this article regarding continued attacks, right? That aren't being discussed. And Israel attacked, had a missile strike in Lebanon, near Beirut, and they were looking to attack the one of the heads of one of the militant groups. A relatively large bombing there. And so in the background, it's not being discussed in the news because we have other things that are distracting us, but that is still happening. The attacks are still happening. So we do have some potential risk off sentiment due to that, but you're also seeing oil push to the upside because of it as well. So no one was killed in the strike, but it's continuing to expand in the background. So that's something to also keep in mind when it comes to that Canadian dollar, is that. So, like I said, it's definitely happening in the background and not being discussed, but you see on the charts the impact that is happening, like I said, on oil specifically, um, but we'll continue to monitor that as well and see where things go. Okay. But that's the dollar CAD. No questions here. Cool deal. Let me do one thing real quick. All right. Then the dollar Swissy. Whoops, not dollar max, even though that's running to the upside. Dollar Swiss. All right. And so you got, with this dollar Swiss, you got a combination of a weak dollar and some risk off sentiment. So that 80-20 is still moving to the downside here, right? Excuse me. We'll take this out, right? From the 80-20, we're still pressing down. We want to see what happens at 87,242, right? Once we get, for better or worse, yeah, I feel you. I feel you for sure. Looking to see what happens as we potentially get another press down to 87,242. See if we're able to hold at that level or if we get price to break that flip and move to the upside. Okay. So we'll watch this as it continues to evolve. And as you're still getting some sell-off of those carry trades, right? Along with the risk off sentiment. But here we are, right? And if we press down to the daily support level, we'll take out that A on the 4, right? Which will give us new AB boundaries to the downside. D extension just outside of that. So that could be in line with that move to the downside here, right? And taking out that A, then we'll look for a fresh reversal there. So news today could give us that continued extension down. Okay. And then as we come to the 1, I'm going to build them out here. There we go. Right. 1 hour extension is also in line. So just being patient on this dollar Swiss, see if we get another push to the downside, get us to those low prices. So that's where we are there. Any questions on any of those? Dollar Swiss, dollar yen, dollar CAD. No? All right. Cool deal. Um, let's look at oil real quick. I haven't covered oil much at all, but nice bullish candle to the upside here, right? I'm gonna zoom out and take a look at something, but let's see. Yeah, so that's just been consolidation overall, right? Just bouncing back and forth there. Um, I want to see. Here we go. All right, so that's just that consolidation overall in between that AB boundary. um, 1 second. So now we're getting a push back to the upside here. Okay, so we'll see if a swing low forms there and gives us another launch point. Let's bring stochastic in here. Oversold. Right? Oversold. So we'll potentially look for some buying opportunities here on oil. So to come down to the 4, stochastic is pushing into the sell zone off that nice bullish action. Boom. There's your 80-20 on oil, right? That's your trend line break there. Boom. Trend line break. See if we get a pullback, and then we'll look for continuations to the upside here, right? At least back to that resistance level at $80, but we'll see. We'll see if we get price to carry further than that with things spiking up again in Israel and um, and potential cuts from the Fed. Right, so we'll watch that and see how that moves. Come down to the 1, and there's your bounce back and forth, and there's your takeoff. Okay, so looking for a pullback to come. Looking for a pullback to come. Excuse me. And then we'll look for this to continue moving to the upside. Okay, so we can track that off that 4-hour 80-20 there. Questions on oil? No. All right, cool. Aussie dollar still lingering in these low prices, right? Overall, we're looking for this. We didn't get that retracement like I wanted to see there, right? We got that Aussie data continue to push price down. We are still oversold, right? So do we get the catalyst for the retracement to come here? Okay, and then it's just looking for high prices to get back short. But here we are here on the 4. There we go. Fibs popped in. We got to that 382, but you see we're stalling here. We got some indecision. So we could get a reversal to come here and push back to the upside. So we'll look for that. Down on the 1. That's where we are on the 1 hour. Okay, so nothing in our sweet spot, but we could get a reversal that I've been looking for, right? And give us a high price at some point to then get back short for this longer move to the downside, right? Been an impulsive move down, need price to exhaust and retrace a little bit for that continuation to the downside there. So, like I said, not anything yet, but looking for reversal here. Okay. Euro dollar. We're getting that retracement now, right? You had that news for the Eurozone CPI. Stochastic still oversold here. Starting to get this reversal. Could we get a low put in here to give us a reversal? Right? At least coming back to 109. Right? So do we get this action and then get back short on the euro dollar? Coming down to the 4, right? Here's your deep retracement, similar to that Aussie dollar, right? We've gotten pullbacks here, right? Those smaller waves to the downside. Will this be a smaller wave or will this be a deeper push to then give us a high price? So that's just the kind of action that I'm looking for. So we'll see fundamentally if we get the catalyst for it or not. But overall, my bias on this one is still to the downside, but just looking for those ABCD waves to play out. Okay. And then here on the 1, there's that reversal coming there, trying to break the cloud. So nothing doing right there either at the moment, but looking for retracements and continuations. Questions on the euro dollar or the Aussie dollar? No. All right. Pound dollar just been consolidating. Right, just been moving sideways. Stochastic also oversold. Here on the 4 though, right? Beautiful 80-20 TP2. We're getting consolidation at that 618 retracement level, right? So can we get price to push here like we talked about on Saturday? Can we get price to push to the upside here? Right? And take us to some of these higher levels. So looking for a potential reversal here if the Fed does come in dovish, if the dollar weakens, right? Looking for these dollar pairs to make some turns and push to the upside, even if it is in the short term, right? So that's on the 4, right? Potential C to D move there. And then coming down to the 1, right? You're just consolidating in that 118 and 127 zone. We've already gotten to that 382 level. So we're just watching it from a 1-hour perspective on a breakout of the range. Okay. Questions on the pound dollar? Right. So I'm watching this one off of the 4-hour time frame here. Boom. Okay. Questions on anything that we covered this morning? Nope. Benny, anything before I wrap it up, bro?
No, sir. Great session, right? We're running out of time, but also check those. You guys need to get a chance. Check your NZD pairs on the daily, like your NZD CAD, your NZD Swissy, and your NZD dollar. Looking to form. Looks like they're trying to put in lows. We'll see how the day closes out with the news coming from the Fed, but we will see. Just continue to keep an eye on it. That's it, man.
Okay. Cool deal. Appreciate that, bro.
Yep.
Appreciate that. All right, good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session with my awesome partner, Mr. Benny Allen. You guys have a phenomenal Wednesday. We'll see you then. Peace.